Hi, Joe. So
Hi,
I guess
Kenny.
I guess it's tax time, and it's freaking me out a little bit. And I'm guessing I'm not the only one here. One of the big issues is the tax bracket. How do you figure out your tax bracket, and what info can you tell me and anybody else watching?
Well, Tammy, as you know, everyone's got to file taxes every year, and the tax due date for 2023 tax filing is April 15th of 2024. And if you want to go on extension because you can't find your documents or you're overseas having fun somewhere, October 15th is the extension. Now, people ask me all the time about the tax bracket, and they say, "Gosh, I mean, what is this tax bracket thing all about? And how do I figure out how much tax I need to pay?" Well, what I did was I came up with a little graphic, and I'm going to show you right now, Tammy. This right here. This is a picture of a 7-layer cake. And
Looks
it just,
delicious.
it just so happens that there are 7 tax brackets, 7 tax marginal brackets on the federal side. And I've got them illustrated right here. And it shows that from 0 to 11,000, that's the lowest bracket, you get taxed at 10%. And then it goes up progressively because we have a tax progressive tax system, and there are 7 brackets, as I said. So it's 10, 12, 22, 24, 32, 35, and 37. So a piece of your income is taxed at each of those levels, or those layers, as I should say. And I think I've got an illustration that you can probably show us as an example of how we can figure that out.
I do.
Let's look at this real quick here. It says a single tax filer may think that he or she earns $50,000 per year, that their tax is calculated as that 50,000 times the 22% bracket that they're in, equaling $11,000. This is not right. This is incorrect. The real way, in reality, is that the tax on the total earnings equals the sum of each layer beneath it. As an example, the first layer, if you can remember, that cake that I showed you was 0 to 11,000. So that 11,000 is taxed at 10%. That's 1,100 bucks. And moving up one layer, the second layer, it's 33,724 times that second tax bracket rate, 12%. And then the third layer, which goes all the way up to his last dollar in earnings, comes out to 5,274 times the 22, which is 1,160. So if you add up all those layers, it's $6,307, 6,307, compared to the 11,000 that most people think they're paying.
That is a massive savings, I would say. Holy cow, that's a lot.
Yeah, so I mean, it's not anything that's not really happening already. It's just the way people understand it, the way they perceive it. And I just like to explain these things because we've got, like I say, the progressive system, and that's been in play since uh, the 16th Amendment, which was ratified in 1913. So that goes way, way back. Before that, we had the flat tax. So that was just a flat amount of a flat percentage rate times whatever income you're making. But they came up with this progressive system back in 1913. So, I mean, over the years, we've had many ups and downs as far as what we're being taxed. I mean, right now, as I showed you before, the highest marginal rate is 37%. So I mean, we've had
What
some
does
really
that mean?
well. I mean,
So I should have said that you are a certified financial planner. You're an enrolled agent and you practice in California. And so you know the language and you've been doing this for quite a while. So you're a total pro with all of this, and people can come and trust you because of all your experience there. So, what did you mean?
well, I mean, like I say, we've had this tax system, this progressive tax system in place since 1913, and different things happen throughout time as far as the economy changes, and we've got different administrations in play, and we've got wars that we've had, and so we've had to have higher and lower tax rates to accommodate the paying for all these different things. We've got to pay for all these things. So I mean, we should pay with enthusiasm. I shouldn't really say it, that loosely, but I mean, we need to make sure that we're not riding our bikes in the mud, and we can sleep when the military and the police force is up and walking around and protecting us. So I mean, that's got to happen. But there was a period from 1944 to 1964 when the highest rate was 94%. 94% was the highest marginal tax rate for the highest, wealthiest people. And today it's only 37%.
That's that was in the US?
In the US.
94% of their money was going into taxes?
Yeah,
That's
so it was all
kind of like a communist country right there.
well, not necessarily communist, but I mean, it was like we had, they were figuring things out, and how are we going to get the money to do these things, and it was just that high in that period of time. So it wasn't everybody didn't pay that, but it kind of worked up progressively, like that 7-layer cake that I showed you before. So the people that made less paid less, the people that made more paid more. So I mean, you look at that cake and you think, the more I make, the more your cake, the more they take. But how can you work around that to make it benefit you within the tax law?
I love the examples that you give when you talk because you make it easy to understand, like with the 7-layer cake and all of that. And I think one of the things that you mentioned is that the goal here, I mean, we do want to pay taxes. So like you said, we can pay firefighters and police and have good streets and things like that. But the goal really is to try to save as much money as you possibly can,
Yes.
right?
Mm-hmm.
And still keep within the law.
Mm-hmm. Yeah, I mean, the tax code itself, with all the code and the regulations, is like 75,000 pages. So I mean, it takes about 14 weeks to read through all that, and who has the time? So I mean, you need to go to somebody like me or another tax professional that deals in this stuff all the time, and they know how to help you save as much as possible.
Yeah. One of the things you've said to me is don't think of it as a big obstacle. Don't think of it as something that's so terrible. Think of it, I think you gave a ninja example or martial arts example or something like that,
Mhm.
right?
Yeah. Just think of the tax system as, you've got to do it, you've got to pay it. I mean, everyone has that headwind coming at them. Everyone has 24 hours in a day. It's like, how do you deal with it? How do you maneuver things in the right way so you're not pushed back. You're going forward and you're using it to your advantage within the law. So I mean, everyone goes to a tradesperson or a doctor or a lawyer because they're professionals and they do what they do best, and they do it all the time. They practice. That's their practice. Just as if, this is my practice. I try to, use everything that I can in the tax code, which is given to us, try to save as much for my client as possible. I fight vigorously for them, just making sure that they pay the right amount of tax, the correct amount of tax. And maybe we'll talk again at a later time about how to make more money when you're putting money into accounts, like into retirement accounts, into different savings vehicles. You want to try to make as much as you can, but then you pay as little tax as you have to pay with the tax system. So that's why I am a tax expert, I'd say. I'm an enrolled agent, and I'm a certified financial planner, which means I know everything with a dollar sign. I try to know these things, and I study these things all the time so I can help my clients in the best way.
Yeah, and in your logo, Joe, you say like enrolled in practice before the Internal Revenue Service. So what does that mean exactly?
Well, I'm enrolled with the United States Treasury. So everyone who is an enrolled agent has to pass a rigorous exam, And that exam is only on taxation. So all the elements of taxation they're tested on. And then you've got to go to continuing education classes.
I've talked with bookkeepers and are like, oh no, I don't do your taxes. You got to go to an accountant for that. Like, so who should you be going to throughout the year and then during tax time to handle these finances?
Yeah, it's more of an interview process, I'd say. And you need to get referrals, and you need to talk to people who run the business, because even people who are not CPAs or enrolled agents or even tax attorneys, they could be tax professionals that have been practicing for decades. So they've rolled up their sleeves and they know exactly what they're doing because they've dealt with certain things through experience over the years. So it's more like, what do I need and how can I talk to somebody and get them to discuss things so that I understand what they're saying, so I understand it better.
This stuff is just it's hard for the regular person, you know.
Mhm.
And
Mhm.
so I love that there are people out there that do understand the tax code and can help us save, you know, and maybe bring in a refund. Now, we're not always going to get a refund. Like, what's the difference between getting a refund and not getting a refund? Because I think some people really look forward to that time of year, like, okay, I'm going to be able to get some money back. And sometimes it can be a big shock and disappointment that they have to pay instead of getting money back.
Yeah, and that comes into the planning part of things, Tammy, because I mean, you're like I said before, you're supposed to pay the right amount of tax, and if you've got that managed properly, you're doing it yourself because you know what to do, or you go to an advisor because they've done it for years and they know how to do it. I mean, that's the way you get refunds. But I think of it refunds as you're getting your change back. It's like if you go to Starbucks and you order the frappe or the frate, whatever they call it, and
Latte.
and, and they and they and you pay them $20 and they give you your money back, your change back. It's like, I got a refund, yay! You don't pay that, right? Because you want to pay the right amount that's due for that drink. So it's the same thing with your taxes. It's like, if you plan right, you'll come as close to break even as possible. Because if it's a couple $100 more, like a refund, or less that you owe, or it's like you're within that range, I mean, you've planned properly, which means you're getting your money throughout the year instead of waiting until the end of the year for this refund.
Yeah. All right. Well, I think that there's so much to learn here. And I think we want to maybe try to break it up into a couple of different segments. So maybe another time we chat, we can talk about um, a couple of secrets
Okay.
to save you money during tax time to maybe increase your chances of getting a refund.
Okay.
Uh, yeah, versus having to pay in. So we'll wrap it up for now, and then let's talk again on another topic. Okay?
Ready. Take care.
So take care.
Bye bye.